US stock markets have had their worst half-yearly performance since 1970. The S&P index on Wall Street is down a fifth since January, with markets in Europe and Asia also seeing steep falls. Some economists are predicting that the United States may enter recession later this year as consumers grapple with rising food, energy and interest rates. Well, let's talk to David Madden, who's a market analyst at Equiti Capital. Welcome back to the programme, David. So clearly a very bad 6 months for US markets. Just how bad do they look from your point of view?
The size of the sell-off is pretty remarkable, considering 6 months ago or 9 months ago, stock markets in the United States were at all-time highs. And it seemed as if their value was going to last forever. So it's not so much the headlines that the S&P 500 has had its worst first half since the 70s. It's more about how quickly sentiment has turned around, because from basically about April, May on in 2020, all the way up until essentially December 2021, stock markets in the US and around the world were absolutely booming. We also saw very large uplifts in energy prices and also metal prices, not to mention cryptocurrency as well was red hot. So investing around the world, particularly in the kind of risk-based assets, stocks, metals, cryptocurrencies and the likes, they were absolutely booming, and now it's completely turned on its head. So it's, if anything, it's more how quickly sentiment has shifted is actually what really stands out for me.
We know, of course, that inflation is high and there's concern about a potential global recession. Is that what this is about, or is it something more? That's
one element of it. Inflation is running at a 40-year high in the US, at a 40-year high here in the UK. Over in Germany, it's also at a multi-decade high as well, a record high in the Eurozone. These would all contribute to the factor that, to the idea that consumers around the world are going to have less money after their essential bills have been paid. And when disposable income gets hit, because the cost of items going up is outstripping the cost of wage increases, people are net worse off. The cumulative effect of that over months and months and months is a genuine drop in demand. And when demand falls, that's also when you actually see economic activity taper off. We've already seen it in various different manufacturing and services reports and retail sales reports in various different countries around the world. So it is starting to filtering through. Because interest rates are high, central banks are determined to hike interest rates to taper and keep a lid on the demand. So we already have a scenario where the cost of living is quite high, and guess what? Things are getting worse because the cost of borrowing is rising because various central banks are hiking interest rates, which is only going to make the matter worse. So it's kind of a combination of both factors. It's what's kind of fueling this global sell-off in both, say, stock markets, metals, and also energies.
So let's talk about Europe specifically for a moment. We're seeing inflation at a record high. How do you see this being tackled?
The European Central Bank have made it quite clear that they're going to hike interest rates by 25 basis points this month rather, now that we're in July. But I think that's going to be very much a very slow start, and then it quickly move into kind of second and third gear with relation to rate hikes. I think the September meeting, we could see a very strong chance of a 50 basis point rate hike, and then possibly a couple more 50 basis point rate hikes beyond that for the European Central Bank. If you take a look at the central bank here in the UK, the Bank of England, they were very slow to react. There was talk of them hiking last November. They didn't. Then they began the cycle in December, and since then we've had 5 rate hikes in 6 months. And we've seen something similar with the Reserve Bank of New Zealand, multiple rate hikes in a relatively short space of time. So economists and traders are predicting we're going to see something similar with the European Central Bank.
David Madden from Equiti Capital, thanks very much for talking to us today.